Guys, it's Dr. Ingky here.
Hi, Dr. Ellie here, and we are on the Two Dog Show.
Yeah. We are, man. So
Hey, you're looking all hip hop with lots of money.
lie.
Where's your gold chain, man?
I got beanie. I got this is my gold chain. This one can be my
there you go.
gold
There
chain.
you go.
I got some blinks. I got some blinks on my finger.
I will screenshot you, then I'll put that big dollar sign, just like
big
50
dollar
cent
sign
on everyone. Yeah,
exactly.
So what are we talking about this week?
So we're talking about investments. I think investments come in all shapes and form. I think we just talk about the simple things first, in like something like investing 101 or
introduction.
Introduction to investment.
Let's assume that I'm the dummy, even though I've got a boardroom at the back. But you got all the dollar signs. So
I have the dollar sign.
You got a dollar sign. I've got just this pseudo, background that nobody's sitting there. No one's listening to me anyway. All right, so we're gonna be talking about investment. We're gonna do simple investment, and introductory for those who are listening in, and you want to just have a rough idea on where to dabble or make the money grow.
Yeah, exactly. So I think when it comes to investment, people always think that it's money. People always think it's financially. It's something to do with the dollar sign.
Correct.
Unfortunately, investment actually has the term itself actually has nothing to do with the dollar sign at all. It's actually just putting in certain things, trading something. Something for something else. Something that you have a lot for something that you want or you deem valuable. That's the gist of investment.
Correct. So, ladies and gentlemen, this is a bit of a trick day. So we're not talking about money in, money back, but it can be anything. It can be money in,
anything.
Knowledge back. It can be
knowledge back. Exactly.
Time in, effort back, or gratitude back, something like that. So we're talking about investment in that sense. Tricky, you put a dollar sign,
not
show me
bad,
not
bad. Yeah, but end of the day, all of us also want to know, how do we make more money?
Or at least how we improve our chances.
To
make money or to move forward. To get ahead of life.
Yeah. So let's kickstart it. So Ellie, what was your first investment, or what is the investment that you think that really brought you many returns?
I would say the best investment I had would have been to start working early. So at the age of 14, I actually had my first job during the school holidays. So I worked as a receptionist for my mom's friend who ran a curtain shop. So it's a curtain shop. It's a girly place. And I'm there picking up the phone and going, hello. Curtains and curtains.
It's child labor, man. This is child labor. You're not supposed to be working at that age.
Well, it's child labor if they force you, but this was a willingness. So this was a willingness to work, and I was in a way thankful that somebody actually wanted to hire me for get this 10 ringgit a day.
Hey, okay, 10 ringgit a day. I mean, back in your time, you can buy a lot of stuff.
Yeah. So shut up, like you.
Back in your days, $10 goes a long way, man.
Well, to be fair, I was aiming to hit just about $100, $120, 120 ringgit. Because back then, computers did not have a sound card. It was all
that's right.
PC speaker. Oh, you're that old also, right?
Yes.
Welcome.
Yes.
Yeah.
So
anyway,
remember.
So anyway, PCs did not have a sound card. They have the PC speaker, which is a very sorry sound, muffled speaker. So when you play your games, it's like that kind of sound. It's horrible.
Yeah.
Then and you can't hook up a speaker to it, so you need to put in a slot in a sound card. Then only you can hook up to a speaker. Then you get all the volume for your games and all. That was my aim, just to buy that sound card, and it was a Sound Blaster, 8-bit Sound Blaster, not even 16.
Hey, not bad, man. Sound Blaster was the
Creative Labs
brand to go.
It
was the brand to go for back then.
Yes, but it was the entry level 8-bit, so that's how old I am. 8-bit sound.
It's okay.
But yeah, so that was my investment. I think it was very interesting because I've never had double in any form of work prior to that, and being 14, um, quite shy actually, and having to pick up the phone, talk to people, take appointments. Although it seems simple, and it's a bit boring, but it was still something that taught me. It taught me a lot of patience. That you have to sit there and do nothing and just wait for the phone to ring. And when someone calls, you've only got a split second to write down exactly what they say, what they want to tell you. And if you don't get it, you can only ask them back once, and you can't go, huh? You actually have to speak carefully, like, I beg your pardon, could you repeat that for me? And when they blah, 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 something, you're like, oh, crap. And I'll be honest, I probably miss like maybe 2 or 3 messages
You lost
a day.
a lot of money, lah. Wasn't worth paying you the $10, man. Wasn't worth paying you the $10.
I don't think she's listening in, so never mind. Sorry, Auntie Joyce. It was a long time ago, but thanks a lot for the job. Yeah, so that was my investment. That was my step 1 investment in terms of self-investment. Taking up a good 2 weeks off my school holidays, whereby back then holidays were fun. We were supposed to just have fun, do nothing. At 14,
you're supposed to just chill.
Chill, at 14, you're supposed to just chill and not thinking about working. And yet I had the opportunity to take up 2 weeks, work something.
Very good.
And that taught me a little bit of work ethic. So that was my first self-investment. How about yours?
Well, my first self-investment was a little bit different. So it was back in university. I was back here for summer holidays. So most people, what they do during summer holidays is they'll chill, they wouldn't do anything for like a couple of months. Some would actually go and attach themselves in hospitals. So what I did was, during my first summer holiday back, I knew what I wanted to do long term already. So I was always very interested in the stock market. Because I've always seen my dad, when I was growing up, I always see my dad watch the stock market through his teletext.
Wow.
Back then, kids, if you do not know what teletext is, you are missing out on something, man.
It's television. It's television.
It's just in text.
You press the channel and it goes all just text.
Just
It's
all
like
numbers and words, that's all. No graphics,
It's like watching the airport arrival board.
Yeah, exactly. So I would always watch my dad watch teletext. So he would check out on his stocks, he would check new counters, and I always found it very, very intriguing, lah. The market goes up, the market goes down. So, and I knew that it's a long-term play. So I wanted to get the basics.
All right.
Nobody wanted to teach an 18-year-old the basics, right? So it was difficult. There were no internet. If I wanted to learn about stock market, I need to go out either to work at a remiser's office or to go and buy books. And books back then were expensive, like $100 just for a book teaching about basic tips on a stock market investment.
There was no YouTube back then. The YouTube,
there was no YouTube back then. Yeah. So what I did was, one of my dad's friend actually works as a remiser in one of the investment firms.
Okay.
So I actually asked whether I could do a 1-month attachment with him.
Wow. Okay.
Yeah, just do a 1-month attachment. So I had to write in a formal letter to the investment firm saying, I'm just a student. I'm here to learn. I'm not here to steal their corporate corporate mojo or anything. Yeah. So I was there for a month, sitting beside him. He was the remiser. He was teaching me everything. Same thing as well. Even they also have a computer with all text. It's just like teletext, except they could key in offers. They could see real-time offers coming in and out. And it was interesting because he would make calls. Right? Yeah. So basically back then, everything was done through the phone. So he'll pick up the phone. Either he get new leads or new customers coming in, or he would then have to pick up the phone and inform his current clients. Oh, your portfolio is making money. Do you want to hold on? Do you want to sell? Or however, from what I see, and maybe you should hold, or maybe you have made enough, you should sell. So he taught me the basic tips of stock market investment. But the main thing that I learned from it was that stock market investment, no matter how much data or charts that you actually see, the one thing I realized, it actually runs on human emotions or human psychology. That's the one thing I actually learned about stock market, stock market, about investing in the stock market. It's basic human psychology 101. When people are afraid, people mass sell. When people are greedy, they just buy no matter the price.
Correct.
Even though the price doesn't justify, it's not a justified price, they will just buy. So everything is fueled by emotions.
It's just like what has happened to glove stocks, rubber stocks.
Glove stocks. Yeah, that is bullshit, man.
It just goes up. It just went up.
Did you see today's Marsing counter?
No.
Marsing announced that they are going into the glove market. Their stocks pop 30%.
Yes.
That's it.
Just an announcement. That's it.
What the hell, man?
And
it's a property company going to glove. Oh my god! It's just an announcement, and they're already up 30%.
And tomorrow, if Trump just says we don't like Malaysian rubber, it'll drop.
Exactly.
It'll drop 60%.
Exactly. So everything is actually human psychology. So that's the main thing I actually learned about stock market investing. The second thing I actually learned about stock market investing is don't put all your money in
one stock.
Go in one step at a time, because that actually burns a lot of people. Yeah. Good. I was there for a month. I learned a lot, even though I didn't really officially start investing in stocks until I was like 25, 26. That was like maybe 7, 8 years down the line. But that 1 month taught me a lot of things about the stock market, taught me how the market actually ran. The market is actually controlled by certain large corporations and fueled by human emotions, human fear, human greed.
Yes. That's the main driving force.
Yes, that is.
Inky, this is a question I want to ask. These days, right, when we look at the stock market real time, they've got all these charts. They've got all the bar charts, the candlestick charts, etc., etc. And then they've got the predictions charts, blah blah blah. How was it back when, in your old age now? How was it back then? Did they have charts or what was the mechanism of monitoring?
So back then, they would not really monitor all the counters. They only monitor some of the large counters, and they will manually draw the charts. And this was like back in the year, probably in the year 1999 or 2000. There was, and this is after the 97 Asian crisis. So back then, there wasn't any software that could create charts real time for you. You would need, and there was no Excel sheet back then. It was Lotus 123. So you would have to manually draw the chart yourself. You would have to manually draw the chart yourself.
So literally, in other words, it'll be like, 1 or 2 person manning just a couple of counters.
Yes, that's right.
It. They were that specialized, right?
Yes. So different remisers or different stockbrokers focus on different industry or different counters. And the moment they realize something's happening in their counter, they will then share it with the other remisers within the same hall. So they'll tell him, I think something's happening. The stock is going to go up or the stock is going to crash. And then they will then, back then, right, there were a lot of insider trading. So they would then call up their friends working in that company. Is your company doing anything? Of course, insider trading is illegal. So of course, So but people will give a little bit hints here and there. So hence that's how they would then advise their clients. I think you should hold, or no, I think you should liquidate and move your money somewhere else. But again, it wasn't really based on stats. Neither was it based on all this current all these Japanese candlesticks and all these charts. Back then, I mean, it is how stock market has always been. It's always based on human emotions.
The emotions and the chance and a little bit of gamble, but ultimately you're right. It's still a little bit of the inside trading. They already know what's going to happen. They know a little bit of the political scenario, the geopolitical scenario, the economical, political, geopolitical, economic, whatever scenario.
So the one thing that my dad's friend actually told me is the world's largest casino is the stock market. Right? You need to play the long game in order to win. Just like any gambler. When you go in for the first time, you don't know how to gamble, you definitely lose money. So you need to play the long game in order to win. But end of the day, the house always wins.
Correct. The house always wins.
The house always wins.
They will play by the margin. Even if you win
Yes.
today, 9 fellas have to lose to pay
Yes.
you, but the house will
Exactly.
still take the average.
Yes,
winnings.
that's right. That's right.
Yeah,
The
so
house always wins.
Yeah. So I think the challenge, not challenge. I think like now I've seen some stock market. You know, well, let's skip that first. My dabble into this kind of trading was in forex. This was back in 2008, 2009. Yep. So during that time, things start to get a little bit savvy. There were apps, and you can do it through your phone. Actually, the phone not that good. Phone was actually just numbers. On the laptop, you could still see the charts and everything. Then I went into forex. I don't know how I got myself into. Probably it's one of those ads that says, money, and and I thought, okay, let's see if I can play this game. So I went in. I would say I've burned. Not that much, but it's still a lot. I think I burned close to about 5,000 or 6,000 ringgit. Lost everything, like seriously lost everything. Despite trying to watch some videos, they make it sound so simple. And they give you that simulation account, and my account made money. Wow.
Yes, he always makes money.
My
simulation accounts always makes money.
Simulation account double up the investment in a week, and I got so excited. Oh, I'm a genius. So I went in real time and, well, made some. Then you get
some,
lose more.
Net loss, basically.
Net loss. Then you top up, thinking that you'll at least break even and pull out.
Yeah.
Then you win a bit. Then you lose a little bit more. At the end of it, I realized each time I top up, I saw the pattern that I'm just no different from a gambler.
Yes,
I'm trying to leverage and double or nothing kind of thing. And it was bad. So by then I burned enough, and I really quit. I've never gone back into it ever.
Really?
Ever.
Yeah. So forex is not my thing. I'm not a big fan of forex because if you think the stock market is,
it's worse
if you think the stock market is manipulated, the forex is worse. Forex is worse.
Absolutely makes no sense.
Yes.
And it's a longer trading time. Like stock market is a short period of time.
Yes.
Yeah. So you trade morning to the afternoon, then there's a break, then evening trade, and that's it.
And the market closes. Yes.
Unless you want to do multiple markets, but forex starts on Japan opening time.
Yeah. It never stops. And
it stops when LA sunsets,
LA sunsets, then a couple of hours, then Japan starts.
Japan starts all over again.
Yeah, so forex never stops. And most of the big movements of forex actually happens when we are asleep.
Correct.
It happens when we are
asleep.
When
our time zone is gone.
Yeah, when America's awake, when Europe's awake, then that's when most of the stuff happens. Yeah. So I mean, other than stock market and forex, what other investments have you done, which you have done relatively well?
Well, that would be more into doing the investments accounts, or doing what's that? What's the name of that thing? The one that I did with the Kananga investment thing.
The unit trust, is it?
Unit trust. I'm not sure. Do they call it unit trust?
No.
It's not
they don't call it unit trust. They call it investment funds, basically.
Yeah, investment funds. Basically, it's something like unit trust, like the whole
something like a unit trust.
Mutual funds, like mutual funds.
Yeah, mutual. It's something like mutual funds,
like public mutual kind of funds. So I've done public mutual funds, and I always benchmark investments against EPF.
Oh yeah, definitely have to.
Yeah. So anyone out there, if you're listening, you just about to start, always just look at your EPF. So EPF is paying you between 5 to 6%.
Yes.
Then your investment better
have to pay more than
pull back more than that. If it's just like 1-2% above that, the amount of risk and headache is not worth it.
Yeah, it's not worth it. Then you just leave your money in
EPF. Don't think about it. You can sleep well. Whereas if you only make like 2% above EPF, please don't jump for joy. It's a waste of time.
Exactly.
Yeah. So a lot of people talk about that, and then I jumped on the bandwagon, and again, this was dumb because I didn't do any research. So went into the public mutual one. Well, there's always two sides of the story. Some people say it all depends on your monitoring and also your fund manager. But again, today's topic is about investments for idiots and an
Yeah.
idiot. So as an idiot, I went in, and after 5 years, it just like 1% below EPF. my net gain was a net loss of 1% below EPF. If I had just kept it in there for the last 5 years,
EPF.
I would have made more than taking it out, putting in some investment, and then by the time it broke even, not even broke even, it's just below the breaking even level. So that was a bad one. Before finally I did spend a little bit more time finding out the right person, and maybe also just a stroke of luck going in at the right time and everything. So now with the current one, at least it's faring much better.
It's good. It's
yeah.
very, very good.
So it's okay, but again, total idiot. So I think I represent the masses of idiots when it comes to this money investment.
Well, I think it's actually the same. I think end of the day, right? End of the day, you can learn as much as you want from dummy accounts. You know, you can learn as much from online blogs or from books, but nothing beats the real experience of putting your own real money in and watching the market grow or shrink. And you will then realize once your own money is in, it's different.
Correct.
No, yeah, it's totally different. And everybody, before they start making money, I would think people generally will lose money first before they actually start making. So hence, when you go into any investment, never go all in.
Yep.
Right. To anyone listening, never go all in. Never think that, you know what, I think I've done quite well. I'm going to put all my money. I'm going to borrow money and put in some more. That is how people go. That's how people go bankrupt.
Yes.
Right. So go in a little bit.
Yep.
Lose the money, but use it as a tuition fee. Yeah, learning experience.
Correct, correct.
Everybody needs to lose a little bit of money first.
Yep.
And then it's how you handle the loss of money.
Or the gain of knowledge.
Or the gain of knowledge. Yeah.
Or
so you have to go through the
wisdom.
entire. Yeah. So a lot of times, right? A lot of people don't talk about it. But it's when you lose money in investment and you get those sleepless nights, and you kick yourself in the ass. You say, I shouldn't have done that. But everyone needs to every single investor has to go through that cycle. Whereby you've made money, you have the euphoria, and then you've lost money. Now you have that depressive state. So everyone needs to go through that cycle. And once you have mastered controlling your emotions, then that's when you truly will start making money in any sort of investments.
Correct. By then you would also know what's your appetite and what do you want.
That's right.
Yeah.
Yes,
so
your risk appetite.
Your risk appetite. Are you a high risk taker, mid risk taker, low risk taker? And what form of investment suits you better?
Yeah.
So
there are multiple forms of investment out there. It's not only the stock market, it's not only Forex, it's not only mutual funds. There are tons of it out there. Really, like what Ellie said, depends on your risk, your appetite risk, right? Whether you are, you want to risk a lot or if you want to play it safe. So for me, I am not a big fan of property investment. Right? I'm not a big fan of property investment because I'm a risk taker. So I don't like waiting long term for my money to come back. Right? And then the next thing what I don't really like about property investment is
liquidation. Takes long time to sell.
Yes, that's right. Liquidation takes a long time.
Plus,
so for me,
you don't always get to sell at the price that you want.
Yes, that is right.
You buy, let's say $500,000, and then it hits. Supposed to be, everyone's selling at 1.2 and you want to sell at 1.2 and nobody wants to buy at 1.2.
Exactly.
Then when you sell at 1.1, although you already made 600, but the greed says, I lost 100,000, it's worth 1.2, but I can sell 1.1. It's annoying.
Yes, it is.
Yeah, it's annoying. So again, you're right. That's also not really my cup of tea.
Property is not my cup of tea.
I would probably put in if there was excess cash and just like dump it and don't think about it. It's not so much of a property, but it's more like a savings account.
Yes, exactly.
That probably would gain more rather than FD.
Yes. So they actually did benchmark. I wouldn't say the benchmark. They actually did a retrospective charting. So they said, right, in the Klang Valley and in Penang and all this so-called prime areas, your property only appreciates 5 to 6% per year, the value.
Mhm.
And so you only appreciate 5 to 6% per year, which is roughly according to EPF as well.
Correct.
It appreciates 5 to 6%. But of course, the difference between property and of course EPF is there is a possibility that your property might suddenly be more valuable.
Yes. For
Overnight,
example, there's
yeah.
an MRT station out of the blue.
Yes, exactly.
There's a highway
Exactly.
where
So
the entrance is 100 meters away from your house.
yes,
Then
exactly.
it works. Yeah.
Exactly. And then you can always rent it out, for supplementary income,
Mhm.
So that's a good thing about property. But again, and as just like I'm not a big fan of property, so I don't really. If you ask me to invest in property, I say no thanks lah. For me, it's still the stock market because
Mhm.
I enjoy the ups and downs. I enjoy the ups and downs. I love it when it makes money, and I love it when I lose money.
As the Cantonese say, "Linh đắc hỷ phong đắc tai."
Yes, exactly,
Whatever.
exactly.
Which literally translates to, if you can lift it, you can also let it go. All right.
Yes, exactly. So, what
Let's talk-
sort of
let's-
other investments?
Let's talk a little bit about since I've touched on the forex. I think I just want to caution some people out there. So these days there are a lot of people who will be texting and trying to get you into this property thing. I get random people texting on Facebook and then saying, "Would you like to invest in this?" And they start sending me charts, even though I didn't say anything. They start showing charts about how they make forex, like
Yes.
1,000 USD per day, and they just get into the whole thing with you.
Yep.
So I think, as someone who's got burned a little bit, I just want to caution our listeners and our viewers out there that when it comes to forex, number one, it is not a fair game. Number two, you're not protected by Bank Negara because it's not it's not legal in a way in this country.
It's not legal.
You can do it, but it's not recognized. So it also means if you get burned, PIDM will not cover you.
True.
So you cannot say, true. I put in, Bank Negara is supposed to protect me. This thing is happening in the country. The company is registered in Malaysia. Why isn't there anyone protecting us? We are in the back end. FYI, everyone, you're not covered by PIDM, which means there's no insurance for your investment. If you burn, you burn. If they cheat, they run away. I'm sorry. It's as good as you invested into a Ponzi scheme and got out of it. So be very careful. And the other thing that can happen and has happened to one or two of my friends is that they made money, but they couldn't withdraw.
Okay. So those are not really forex companies, right? Those are more like Ponzi scheme companies then.
No, they still go by the whole forex thing. You have to go for the classes, and then they show you the charts. And when time to withdraw, they don't want you to withdraw.
True.
Yeah, and apparently they prey on a lot of people to bring them into these classrooms, and they make it sound so simple that they've got this manager who will give you the signal to buy, signal to sell, and you will just make money because they're waiting for one day when they forgot to signal you and you crash and burn. Then you owe them money.
Yes, that's right. That's right.
I got a feeling they're more like Along companies. They
maybe they're affiliated for maybe they're affiliated for
the crossovers. All right, so other investments. Let's see. How about you? What other investments have you done, or do you know of?
I know of a lot of different form of investments, and nowadays the in thing to invest is into is what they call crowdfunding, right? They crowdfund companies,
correct.
They crowdfund companies. That means that this company A or company B, they're looking to raise funds, so they want you to they're looking for crowdfunding, and you would think that it's crowdfunding, your risk is minimally low because not only are you putting in money, but maybe tens or hundreds of other people are putting money as well. And you assume that everyone has done their due diligence, check out the company. So the one thing I don't like about crowdfunding is this: you don't exactly own your shares.
Yes.
You actually put your money into a holding company, which is controlled by someone else, and they invest on your behalf.
Yep.
So you don't get to liquidate whenever you want. You don't go like, you know what, I'm a shareholder in the company, I want to go and complain. Actually, you can't really complain
You didn't
because
buy shares.
you didn't buy share into the company. You bought share into the holding company that bought shares into their company.
Who was
So
sort
even
of like
though,
give you a fixed return and that's it.
yeah,
Pretty
so
much,
they
yeah.
can claim lah, they can give you a return lah. Nowadays, the people are very smart. They give you vouchers. You cash voucher. You can come to our establishment. Example, maybe the establishment is an F&B. Oh, if you invest this amount, you can come to our establishment, redeem a little bit of cash voucher and eat for free for like one meal. So, but then the risk is whereby if anything does go wrong, you cannot claim anything back from the company because you're not a direct investor into the company.
Yes.
So even if they liquidate and then they need to pay the creditors and whatever's left, they will then liquidate and pay out to their shareholders. You don't get a single dime.
Yep.
You don't get a single cent out of it. So crowdfunding, as much as it's the in thing and approved by the government, I still think it's a little bit dodgy for most parts.
Because the amount of due diligence that they're going to give it back to you is not much. Plus, they're not responsible to you. You're responsible to make them rich, but they're not responsible to feed you back or liable to pay you back if anything goes wrong. I think crowdfunding started off quite innocent. You remember the days of Kickstarter?
Yeah. It was Kickstarter. Yeah. So back then was people really wanted to build something or
invention.
They had invention. They had a dream project, but they didn't have enough cash. So they just want to crowdfund maybe $1,000, $2,000. People that chipped in $1 each, and then they managed to actually crowdfund.
Yep.
But nowadays, crowdfunding is more towards like
huge corporations.
Huge corporations asking for money.
Yep.
Well, I mean, why? If you're doing so well, you can always go to a bank and ask for a loan.
Yeah, because the bank is not going to approve them. Bank has done their due diligence.
Exactly. The bank has already done their due diligence. The bank knows that these guys are at high risk. No way.
The bank doesn't want to give them. Yet people who said, I want the scheme cepat kaya, I'm going to invest in this guy.
Yeah. Because and then they always give you the same corny backstory. Back then so and so invested in Facebook. He put 50,000 in. Now he's a billionaire. Yeah, that is like a literally one in a billion shot.
Yeah.
There are a billion other suckers who lost money in the same kind of scheme.
Correct.
It's just one guy who made money out of it, and he was a direct investor. He didn't go through all this crowdfunding.
Well, as I say again, the house always wins.
The house always wins.
Yeah. So but remember the days when let's digress a little bit when it talks about investment. So when Kickstarter, one of the famous thing was the Pebble watch.
Oh yeah, Pedal Watch. Yes, that grew to quite a large company.
Quite a large company. So they were the ones who directly challenged the
Apple Watch,
the Apple Watch, and also the Android first generation. They looked the best.
Yes, they look the best.
Stylish.
They
literally beat Apple Watch Generation 1.
Yeah, they beat. So in that sense, the crowdfunding actually worked because it was a bunch of guys who think that they can create a better product. And they actually didn't ask for a lot of money.
Not much.
If I'm not mistaken, they asked for like maybe tens of thousands of US dollars.
Yeah, I think max it hit about $100,000 and that's it. Yeah. But to be fair, they would say you can you invest, and we will give it back to you in a watch.
Yes.
So you'll be the first, let's say, 500 people who owns the watch. So you had the bragging rights before they went into full production and sold it.
Yep. But Kickstarter doesn't actually guarantee whether you actually get your product or not. So I actually bought a couple. So I actually so-called invested a couple of products on a Kickstarter. I got a couple. One actually didn't turn up because what happened was they actually hit their target. It was way above the target, and they were doing manufacturing. And of course, things went wrong with manufacturing. So end of the day, after like half a year, whereby it was due past their deadline to actually ship it out. 6 months later, they actually apologized, saying, you know what, guys, we've spent all the money. There's nothing much that we can do. Of course, people were angry. Say, oh no, you cheat our money. You should give us back. But if you actually read the T&C on Kickstarter, they already mention it. Please, this is not a platform to buy products. It's a platform to help inventors.
Yes.
So do not expect anything in return.
Yeah, because you put in with the hope that you might make the world a
Yes,
slightly better
yes,
place.
exactly.
Yeah, but it became like a few buying future products place.
Yes, that's right.
Yeah, and then after that, I think by now there's just way too many, and Kickstarter just sort of like disappeared.
Yeah, I think that they're not that popular these days, really.
Yeah, they've taken over by those big corporations.
Yeah.
So other forms of investment. Well, let's digress away from just plain financials. I would say development, self-development. One of the best investment I did was to actually subscribe to audiobooks. Audiobooks. So it's not, I mean, it sounds expensive, but for $15, which sounds a lot as a subscription, although we pay a lot. When Netflix comes out to 40, this comes out to 60 ringgit a month for audiobooks. But I subscribed for about 6 months and I loved it because it sums up a lot of books into a very digestible 15 to 20 minutes segment. You don't need to read it. Someone's reading it out for you. They summarize it for you. And if you like it, of course, you can go back and go purchase the book or reread the text. But it was my best friend for traffic jams.
Yeah.
Traffic jams. I think this was the days before there was that many podcasts on Spotify. So back then, audiobooks were much more favorable because it was actually real summary of books. So I was averaging like, I think about 20 or 30 books a week.
Oh, that's a lot.
Yeah. Although some
20, 30 books a week is a lot.
Yeah. Then I realized one thing about self-help books. I don't know why, because when you click one, then they sort of like just link you to the next few.
Yeah.
After you listen to the third self-help book, it's like, same thing repeated.
Yeah, it's actually roughly the same thing.
Roughly the same thing.
So they just paraphrase it.
Correct. They just paraphrase to something else different. But it was just interesting to fast forward and learn something out of it. And sometimes some books actually, then you realize, a lot of it is just a lot of fillers inside. Your real points is as good as just 50 pages out of a 300-page book. So
that's right.
But that was a good investment for me. And I think I'm currently reading this book, and it says that if you think of converting your traffic jam time instead of listening to music, and you listen to something productive, whether it's an audiobook or podcast, for those of you who are tuning in, just listen to the Two Dogs. It's also very educational in some ways.
It is very educational.
Yeah, it's two doctors who has gone through a lot in life, telling you and summarizing life for you. So anyway, if you assuming like, for me, it takes about 30 minutes one way back. So that's 1 hour of commuting per day, 5 days a week. And let's say over 52 weeks, 5 times 52, that's as good as 250 hours in a year. That actually sums up to be as good as 1 or 2 semesters in a university.
Yeah. So I actually totally agree with you, because if you're stuck in traffic or if you're in public transport, you're sitting around doing nothing. Rather than just listen to music, of course, music is soothing. Nice. It calms you. It distresses you. But at the end of the day, or it gets you hyped up before your day. Pop by a podcast or an audiobook, whether if you want a fact or a fictional book, it's really up to you. But you get to learn stuff from it. And just by passively digesting it, you can actually pick up a tip or two to actually improve your life. And even for me, one of the things that I look forward to, unfortunately, there's the whole MCO thing. One of the things I actually look forward to on a yearly basis, right, is actually to go to the Big Bad Wolf sale.
Yes.
Right.
Yes.
The reason why I like to go to all these Big Bad Wolf sales, it's because there's a lot of these self-help books, business books, generally good ones on super discounts. Usually like 70 to 80% off. So I will buy a stack of them, maybe 10 to 15, and then I would slowly read them throughout the entire year. Because Big Bad Wolf only comes once a year. So I read out through the entire year. So every year I will go through that 10, 15 books, different 10 to 15 books, depending on what I want to learn at that particular point in time.
Correct.
And I do agree with you that self-development is actually one of the best investments.
Yes.
Because it allows you to grow mentally. It allows you
Yes.
it allows you to mature, and it
Mhm.
allows you to actually learn a lot of other things
Yep.
without really spending too much time or too much money
Mhm.
gaining experience. You can actually gain it through other people's experience
Mhm.
first,
Mhm.
right? Get a little bit of motivation from there. So at least there's a platform for you to start whatever you want to do.
Mm. One thing I find about self-help books as an investment that's very interesting is that you have to go through that hardship in life first. You have to go
Yeah.
through the shit. You have to, have bad experience in the job, bad experience with your staff. You have to, got nearly sacked or nearly gone bankrupt, that kind of feeling. Then when you read the self-help books, they somehow open up a new revelation, and reading the
Yep.
same book twice on a different time in your life actually will give you a different perspective.
That is
So,
true.
so that is also one of the best things. I recently just bought, I think, about 4 or 5 books, and one of it is by Brian Tracy. He talks about selling, how to close a sale. Chapter 1 was so captivating. It's 40 pages for the first chapter. I thought it was just introduction, but for 40 pages, I'm glued to it, word after word after word. And one thing that I read, and I probably want to commit to myself, is to wake up an hour earlier each day and just spend an hour reading a book.
That's good actually.
Just to spend 1 extra hour. So literally have to sleep an hour earlier, wake up an hour earlier. So don't need to do all the exercise if you're too lazy, but just do the mental exercise. Just read. Even if you're slow, having a coffee, having some tea, having some breakfast, just read. Doesn't matter if it was 5 pages, 10 pages, or whatever it is, just run through. Because he says, which I think is true, so don't pick heavy books. Pick things which are easily digestible.
Yes.
And I've got this rule of thumb. It has to be large enough fonts. I don't want to squint. I'm a bit of
Yeah.
I'm a bit of a
No, no,
child.
no.
I'm a bit of a
I
child when it
understand.
comes to reading because I don't want to
No, I
squint.
understand. I understand. I totally understand.
I want to see that it's easy read. Picture, no picture, doesn't matter, but must have that font size which is just nice, not too thick. It has to be about that 200-page max thing, and that's fine.
Yeah.
Because it's easy read.
I totally understand. I
And-
totally get you. So what I do when I go to Big Bad Wolf, right? Because you can only they give you a synopsis of the book at the back, right?
Yep.
But you do not know whether it's an interesting book or not. So what I
Correct.
do, I usually just flip the pages.
Yep.
Yes, one of the few things that I actually look at is the fonts, whether the fonts is easy to read or not, whether they paragraph it nicely or not, so that you know that it's jumping from one point to the next point. Then I'll just do like a quick couple of seconds of flip, like, no, I don't think I'll be able to read this. I'll keep it aside.
Yep.
Then I'll take something else and I'll flip again. Yeah.
Yep.
Yeah. I do that all the time. Don't worry.
I'm very partial towards that, especially when it's all this business kind of books. If it's like once in a while I like to read a bit of a novel, then that's fine. Whatever comes and it's my favorite author, that's fine. But if it's anything that's gonna be on this serious talk, I like them at 200 pages. That's it. I don't like them at 300, 400. I don't want a dictionary or an encyclopedia. I want to have that motivation that says, I mind baca in less than 2 weeks. Ideally 1 week, but in less than 2 weeks, that whole book finished.
Yeah.
And then you can
finish a book.
You can put it on that completed list. And as it stacks up, you feel like, oh, I've done something this year. It's a bit of a pseudo achievement.
Yeah, that's good. That's good. Yeah. So self-development. So self-development is still one of the best investments. I would still say, compared to everything else, because money comes and goes, but if you gain knowledge, it stays with you forever. It stays with you for a long time, and then eventually you can use that to generate more cash for yourself, or or better finance for yourself.
Yes. So Ingky is right. Self-development is good. Trying to expand your mental capacity is good, and also interpersonal relationship. I think that's also another very good book to read on how to deal with people or how to be pleasant.
Yeah.
Fortunately, unfortunately, it's not that easy these days because of the social paradigm shift from being engaging to now it's everything on the text. I think we've spoken about it before. If someone texts you, hi Ingky with all capitals versus one which is all small letters, big capitals for the whole sentence looks like you're shouting at me.
Yes,
Yeah.
exactly.
So again, communication is very important. Those are some of the books that I'll probably recommend. If you guys want a list, just drop us a line.
Yeah.
Another
So
one.
do you recommend all these self-help seminars? Now we've spoken about self-development. There are a lot of people that actually like to sign up for all these self-help seminars. Do you think it helps?
No. Sorry. No.
I think I think it actually helps a couple of people. Of course, it helps the organizers. It helps them get rich. you are literally enriching their pockets. But but probably out of the entire hall, it probably will change the lives of a couple of people, not everyone, a couple of people in the hall. Then again, end of the day, it's also how what kind of message you take home, and like what Ali mentioned earlier, most of the time, right, if you're in deep shit, then it resonates with you.
Yes.
But if you're there just looking for inspiration, you're there hoping that it will change you, but nothing actually nothing major. There's nothing major going on in your life. I've seen friends who have signed up for all these expensive seminars, and nothing changed. They're still at the job which they hate every day. They grumble about the jobs. They grumble about their personal relationships. Nothing changed. And every time they come back from the seminars, they say that they claim that they will change.
Yes,
but nothing changed.
But you know why they claim that? Because during a lot of these seminars, what has happened is one or two of their barriers have broken down. The very common story I always hear is that they will cry. It's like the organizers will go into this whole thing whereby they have to break them down, and the whole idea is I will break you down so I can rebuild you. That kind of philosophy.
Yes, that's right.
I think it works for some people, but for most people, it's like a sort of like a new experience to allow that emotion of being broken down. Someone shouts at you and then you start thinking of all your saddest regrets, and then you start crying. Then you make some internal promises that you will change yourself and everything. That is probably the most common, a bit of a cliche that I will hear from a lot of people who have attended this. I'm not saying it's bad. I think it's good because it breaks you down so that, yes, it's like muscle. You need to break it a little bit so that you can rebuild it and be stronger.
Grow it. Yes, that's right.
But you still have to keep exercising that muscle. It doesn't just one time grow means you're buff for the rest of your life. If it was there, I would have been so happy, but that doesn't work. But I think those who really want to attend is great, but to sharpen the mind, to be able to accept the full benefit of this kind of self-help seminars, I think you should just pick up any book. And at the end of the book, if you can say you've learned 3 things, and out of the 3 you can apply at least 1 or 2 consistently into your life, your work, then I think you're ready to spend that 4-figure, 5-figure self-help seminar and learn something that will actually really be beneficial. Otherwise, it's just going there to have a good soap opera of your own life. I mean,
exactly.
I'm a bit nasty when it comes to that.
See, no, even to me, so it's the same as well. I feel that yes, maybe it might help some people, but most people actually don't benefit anything from all these self-help seminars. Because end of the day, so all these self-help seminars, they will funnel you into their sales pitch. Oh, you want to know more, you have to sign up for the next one, the next one, and the next one, and the next one. It's a never-ending thing. And yes, a lot of people probably need a little bit of motivation. Some people push them. But end of the day, right, it's still up to them. Right? It's still up to that particular individual to say, you know what, I'm done with my life. I really want to change. I really want to change certain parts of my life which I'm really not happy with. And and that particular revelation comes from anywhere. It can even be your friend slapping you in the face and asking you to wake up. So you don't really have to pay for all these kind of seminars.
But if you really want, you can pay us.
You can pay us, and and then we will drone you out with our constant talking.
Whatever that you're willing to pay, we're willing to match it.
Yes.
We'll give you a 10% discount of whatever you were willing to pay that the other fella that you don't know anyway. But you know us, and we'll be very
Yes,
honest with
yes.
you. We can go, advanced, no, beginners, which is we will gentle slap you.
Yeah.
And the advanced will be, we will mentally hit you so hard that you might start crying and and say, I'll pay you double just to stop it.
Well,
All right, other investment.
so yeah. So
Other
other sort
investments.
of investment. Let me think here.
All
What
right, I'm
other
gonna go.
sort of in-
I'm gonna go into health investment. So what
Mm,
while we talk about investment in the share market, we talk about investments in the forex, into properties. Then we talk about mental. Next is physical. Everyone
yeah,
should have a bit of time to invest in yourself, in your own health,
yeah.
because what in the world is wealth going to do good for you if you can't spend it, you can't use it? Imagine you work all your life, and by the time you hit 45, you drop dead, or you
Yeah.
had a heart attack and you can't
Mm,
do much, or let's say by the time you hit 50, time to retire, but you've got arthritis everywhere. You can't walk without, you can't enjoy without having pain the moment you start
yeah.
walking. So spend a little bit of time, do a little bit of investment in your health. There's so many apps out there, and there's so many people out there who are quite can teach some amount of fitness. If you want someone who's hardcore, we know this guy from Angola. His name is
Oh
Tony.
yeah.
Tony,
Yeah,
we
man.
haven't
This is
forgotten
a
you,
yeah,
Tony.
yes. Yes, Tony. We know you're still listening to us.
Yeah, and he's like, "When are you guys coming over?"
Yo, when you come over, we want to train, right? Yeah. So I totally agree with you. Health is definitely an investment. Actually, health is just more than an investment, because an investment is when you don't put anything in, you don't actually get any returns. Now,
Mm.
health, on the other hand, is different. If you don't put anything in, you get negative returns.
Oh yes.
Yeah,
Yes.
as you get older, you get negative returns.
Mm.
So what you're doing every day when you're investing in health, right? You're actually stopping your health from deteriorating at a quicker pace.
Mm.
It means you're slowing down the aging process.
Mm-hmm.
You are extending your twilight years. Now I
Mm.
would say, you're extending your twilight years.
Yep.
So yes, it's an investment, but it is an investment that actually a lot of people have forgotten.
Correct. They've
Yeah,
taken
a
it
lot
for
of people have
granted.
forgotten. Yeah, yeah, a lot of people have taken it for granted. They've swapped trying to make money and trying to work hard for health. Of course,
Mhm.
when you're young, nothing goes wrong.
Yep.
Everything's correct.
Yeah. Wait till you reach
The,
Inky's age, you know.
yeah, reach my age. I've creaking knees. I hurt my ACL. I can barely hop anymore. Yeah, but yeah, you are totally right. You have to put time into health, just like what you mentioned. You read a book a day. You should put at least about half an hour into your into health per day,
Mm.
at least.
At least,
Yeah,
but it's actually not long. You don't even need
it's actually
half an
not
hour.
long.
You can,
Yeah.
in fact, moving about 10 to 15 minutes, but doing the correct exercise is quite
Yes.
sufficient. Rather than doing 3 hours of hardcore exercise, and then you might even damage yourself. So just do enough.
That's
Just
correct.
do enough, but do it consistently. And
Yes,
and
that's right.
that's as good as an investment it's gonna
Yeah.
get.
Yeah.
Another one that I would say, for which probably holds true for me, which I've not been doing very well, is investing in rest. You need to rest.
That one is interesting.
So
That one is interesting.
people who love to sleep say, "Oh, I've put too much deposit in the account," but again, it's one of those things. It's like I don't want to say, maybe go investment. You put it in, right? It's not going to generate any interest for you, but it's good to have it.
I think that is tied down to a lot of things. Rest is tied down to mental health, to physical health as well.
Mhm. Yeah.
You need to you need to rest proper, and as well as from time to time, take time off for yourself.
Yeah.
Go
take a vacation.
Yeah, take a vacation, or even if you can't go for a holiday, what you can do is you can do what Ali does. You can take a day off, just sit and do something that you really like. If you like read books, just sit and read books. Just go through an entire novel, the entire day. That itself is rest.
Yep. So rest comes in different models. So some people like to sleep, some people like to chill out, some people like to go out or even climb a mountain. For them that's rest. It's really up to you. You don't get confined by what people say, oh, you must sleep only. No. So you can choose what you want, but you got to rest, and basically it just means breaking away from your usual stressful routine.
Yes, that's
having a different stress that's totally unrelated. It can technically be a rest from your usual routine. So just rest away from there. Some people like to go car racing. That's a stressful thing,
Yes, it's damn stressful car racing.
Stressful, but they love it, and it takes your mind away from the work for that couple of hours. So it's really up to you. But invest in doing some really good rest for yourself.
Yeah.
Okay. Yeah. Let's see. What are the things that we can tie back to some money? Because I think people still see your dollar sign, and everyone's getting brainwashed by your dollar signs there.
Yeah. So I think end of the day, right? If money is really, if you really want to be so-called financially free, but which you will never be, you really want to put your money into something which can end of the day passively allow it to grow. Right. So the one thing that I've always understood, and I still do it today, is invest in something that can give you compound interest. Compound interest means the interest that piles up on top of one another.
Yes.
And so Malay have this saying, sikit-sikit jadi bukit lah. Dan lama-lama dia akan jadi bukit. So it's the same thing as compound interest investment.
Yep.
Invest in something, it may be in the stock market, or even something as simple as invest in a fund, like what you're doing, an investment fund, or you can invest in this is what I do. I invest in the US stock market. I invest in the S&P 500. So the S&P 500, they have shown on a yearly basis, it gives you the 10 to 12% back, right? Yeah, it's 10 to 12%. It grows 10 to 12% every year, and it's compounded interest. So you can just put your money in and just leave it there. And then every year or every couple of months, you just put more money in, a little bit of money, a little bit of excess money put inside. And before you know it, in the next 30, 40 years, you're sitting on a big pile of retirement fund. Then you don't have to worry anymore.
Correct.
But it always, it always comes from very little investments first.
Small amounts
first.
Yeah, you don't see it until it starts to compound. And when it's a large amount, it compounds way much faster. It's like a snowball.
That's right.
It's like a snowball.
Yes, that is correct.
The beginning is just a little bit, but the moment it starts rolling, when it's huge, it's whoa, it's crazy.
Yes.
So I think for our local crowd, especially the Bumi Putras, if you have the access to ASB, please put your money in ASB.
Oh, ASB is good.
Max out your ASB.
Is good. Yeah, max out ASB, man.
Max out your ASB before you go anywhere else, because that's the most brainless place to put your money. And
it is guaranteed by the government.
Guaranteed. It's guaranteed. Of course, the numbers are not as great as it was 15, 20 years ago, but it is still always higher than EPF.
Yeah, definitely.
And it's compounded. Yes. So, kalau ada duit, masukkan dalam ASB. Amanah Saham Bumi Putra. Max.
Don't go and buy your iPhone for 5,000 ringgit. Go and take the 5,000, go and buy ASB. That's it.
Correct. Because just imagine if you somehow manage to keep a bit, and you've got 100,000 in there. Okay, you've got 100,000, and the compounded interest is 7%. Every year is a free iPhone for you.
Yeah.
Don't even need to touch your principal. You're buying a free iPhone every year.
Yes.
But getting the first 100, that's the one. You have to just keep going in, just keep going in.
And keep putting.
Yeah. So, but the other one that I also would probably want to caution people is when they take loans to put into ASB. A lot of banks are doing that. A lot of these loan officers are doing that, and they tell you work on the margin. Yes, you are at a net gain. I agree. So they loan to you at 4% or 5%, but you are gaining at about 7%. So you always make 2 to 3% as a gain. So, and because when you go in, you went in, let's say you borrow 100,000, you already had 100,000 in.
Yes.
And then when you repay in a smaller amount. So overall, you can still win. And I think if you've got no commitments, no future commitments for, let's say, if you took the loan for 10 years, so for the next 10 years, you don't want to buy anything,
No house, no
no
car,
house,
nothing
no,
expensive.
no new car, no new house, no new anything, that's fine. Go ahead. But if you are just starting in your career and someone said, take this and can make money, yes, you can make money, but it also locks up your credit.
Yes.
Nanti nak beli rumah, nak beli kereta,
Yes,
tak cukup
that's right.
credit score.
That's right.
Then you will
That's
regret.
right. Yeah. And what's worse, if you miss a payment, then it really screws up your credit score.
You miss that payment, the interest that comes back will bite you. So if you took a loan to pay for ASB, that's the first thing you got. Well, that and your credit card bill will be the first thing you need to pay.
Yes, exactly. So one of the tips that I've learned over the years from many people, I've seen many people make mistakes, and many smart people have told me the same thing over and over again, is invest with the money that you have extra, that you can afford to lose. It means you put your money in, assuming that you'll never see it again.
Yep.
Just put it in. Do not put money that you can't afford to lose. You can't put in your retirement fund. You can't put in the money that you're
meant for your kids.
Meant for your kids, or meant for your parents' medical bills. You can't do that. Or as you mentioned, don't take a loan to put in the investment, because end of the day, if you miss one or two payments, the banks are not going to be nice on you.
Yeah, there's no belas kasihan. They will just
the bank's
go
going to chase you. Bank's going to chase you down.
So I think here, for us idiots 101, one of the things that I want to highlight is the slight thing about savings and investment. So when you get your money, it's a good habit to actually pump money into savings first.
Yes.
Then you go buy your other stuff.
Yes, that's right.
Then whatever excess after that, then you dump into investments.
That's true.
So that's the correct way. Of course, even I don't practice that very well.
Yeah, we don't really practice it. Yeah. So one of the things that I actually heard very, 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 very good is you have the 1/3 rule. It means whatever salary you have, right, you split into 3 accounts.
Yep.
The first account is savings. Second account is to pay for your mortgages and everything else, and of course, and also for you to use, right? For you to buy groceries, for you to go and eat, for you to go and spend. And the third one is for investment. It means you keep it for investment. But this takes a lot of discipline, and unfortunately, I think most of us don't actually have that discipline to actually do it.
Yeah, and the problem is because banks are overborrowing a lot of us. To be fair, if anything, I fault the banks for putting me in a bit of a tight spot for quite some time. Mainly because when you want to apply, you're right. You're supposed to have only 1/3 of your salary is meant to pay for loans.
Yes.
But now they've increased it to 2/3.
Yes, that's right.
So 1/3 is for your living expense. 2/3 of your salary. So for example, if you earn 3,000 ringgit, you can take your monthly loan, your monthly repayment can be up to 2,000.
2,000 ringgit.
It should have been just only 1,000.
Yeah.
Then you're stuck. You have to choose, you want the house or you want the car or what you want. But now that it's become 2,000, and then you've got all your purchases, your living expense, your makan, your entertainment, then your credit card bill falls in this 1/3, which rolls over to the next one. That's the dangerous part.
Yeah. Oh, well, so when it comes to that, so one of the things that I want to highlight is this investment, right? Your car is not an investment.
Oh no,
right?
It's not an investment.
Ladies and gentlemen, your car is not an asset. Also,
it's a liability.
Even though banks claim it's a depreciating asset, it's not an asset. Okay, it's a liability.
Correct.
Right? Every time, the moment you purchase your car, the moment you've paid for your car, and the moment you've signed the contract, your car loses value on that day itself already.
Yes. Haven't even delivered to you yet.
Haven't delivered to you, you already start depreciating already. The moment it touches the floor, the moment the tire goes on the road, again, the particular value drops down. So
the moment you go, finish.
Yes. Yeah, exactly. So don't put money, and I've seen a lot of people, they with their first salary, second salary, they put a down payment for a car they can barely afford.
Yes.
They can actually barely afford. So, and then a lot of times they get stuck, they get fired from the job, like now MC, a lot of them lost the jobs. And what happens now? You can't pay for your car because you have no savings.
Yes.
And now banks come and repossess your car,
Mm.
take the car away. You still have to pay for the loan now, even though the banks have repossessed. Now it screws up your credit score.
And you
Can't
don't
take
have a
another
car.
loan.
And you don't have a car.
And now you don't have a car,
Yeah.
and you have a screwed up credit score, and you owe bank money. So my take is always, as much as we like fancy cars, especially guys,
Yep.
we always envision ourselves driving a nice big fancy sedan or that nice fancy sports car. Make sure you have everything else in order first.
All sorted out.
Everything else sorted out. Your housing mortgage sorted out. You have enough savings. You have investments in other things, and then when you have the excess cash lying around, you can put it into your car, no problem.
Yep. So I think this one, especially for those who like to do car mods and everything, I think it's fun. It's a hobby. I've got nothing against it, but just be careful that you don't want to overspend doing the modifications and stuff that is fun, but you end up not getting the value back unless you are a car racer or you're making movies out of it, or there's a value that comes back to you. Then it's fine. But otherwise, if it's as what Ingky says, if it's an excess that you already have, you've already settled everything, go ahead, enjoy it, because it's your own pleasure. It's for your own pleasure. We can't fault you for that, but don't use that as the first payment to go and splurge on that and regret it later.
Yes, exactly.
Oh, another investment that people like to talk about would be gold and diamond.
Yeah.
Well, this one is age old. This one, the Indians, the mama.
Yeah. So gold investment. So of course, gold, right, has that intrinsic value. And it means that for thousands and thousands of years, right, people have fought over gold. People love gold, so gold has that particular value. However, a lot of people fail to understand that physical gold actually costs more than what they're worth. Because they actually charge you for the workmanship and whatever not. And that particular charge, right, you can't claim back. Imagine you paid for a bracelet that's 1,000 ringgit.
Yep.
But you can only resell it for 600 or 700 because that is the value of the gold in the bracelet itself.
Yep.
The rest that you paid was actually the workmanship to actually produce it.
Yep. And that's why even if, let's say, you bought from Pokong, you will get better rates in Pokong. You never get the same rates anywhere else.
Yes, that's
right. So if you really want to invest in gold, it's a long game.
Yeah, gold is a long game.
It's a long game. You buy, let's say, 1 gram at let's say, once upon a time, 80 ringgit. And now it's worth, let's say, 140 ringgit. So you've made that 60 ringgit gain. But it's a long game with no interest.
Yeah, I would say if you really want to get gold, you get paper gold. Don't get actual physical gold. Get paper gold. I think a couple of banks actually sell paper gold. You buy and then it's like stocks or bonds they issue you a cert and that's all. But however, also your money is kind of stuck there because you can liquidate anytime, but it might not be at the right price. Yeah, it might not be at the right price. And like what Ali said, it's a long game. It's a really long game. It's years and years.
I just still have some paper gold.
You have some paper gold? Oh, good lah. Just keep it, man.
I bought it when Public Bank first launched their paper gold.
Yes, their paper gold account. Yes.
I found my bank book the other day, and I bought it for the first round. I bought it for 88 ringgit per gram.
Okay.
You never hear 88 per gram for gold anymore.
No, it's impossible already now. You should sell it now. Now gold is worth a lot.
Yeah, but unfortunately, I think I've only got like 10 grams left inside. I've already, done some trading, made some good money from it. But
good.
Yeah, so it was fun. It was a very fun project back then, and I got one of my staff to actually follow me, and he invested in it. Unfortunately, he spent it on the earnings onto a Ponzi scheme, and he lost everything.
Okay lah. That sucks lah.
Okay, so final take is Ponzi scheme. You guys be very careful on Ponzi scheme. Anything that says, I think we've spoken about this before. Anything that gives you that promised return within 18 months, you will get back everything. That is usually as good as a Ponzi scheme because you don't need to do anything. If it's a share market like Ingky, he has to monitor.
Yes, that's right. That's right.
He gets the
That's right.
heartbeat when it goes up.
Yes.
He also gets the heartbeat when it goes down. He needs to monitor. He needs to make the call whether to sell or to hold.
Yes, that's right.
But things that says, just put your money in and every month we'll give you back 15%, 15%, or 10%, 10% in 1 year, or 8% every month. And in 15 months, you'll get back all your investment. Okay, that's a Ponzi scheme because you're not doing anything. Anything that says don't do work, we'll give you back to you. It's a Ponzi scheme. That's one thing that you might want to avoid.
Yes. So the one thing that I want take back message is this: investing is not sexy, right? It's a long game. It's long. It's years and years. It's 10, 20, 15, 30, 40 years.
And it's a stressful game.
It's a stressful game. It's a long game. Invest what you have, right? What you have. You have excess time. You invest your excess time. You have excess cash. You invest your excess cash, and you only see returns not today and not tomorrow, but you see years down the line.
Yes.
So whether it's a financial investment, whether it's investing to health, investing to knowledge, investing to yourself, you will only see returns many, many years down the line. But so there is a saying, the best time to plant a tree was 30 years ago. Yeah. But the next best time to plant a tree is today. Correct. So that in the next 30 years' time, you get to reap the benefits.
Correct.
So that's what investing is.
Yes.
So you have to start early. You must be consistent. You have to water the tree every day. And eventually you get the rest under the tree.
And you need to wait. That's
you need to wait. It's just
wait. It's just
you have to wait.
It's almost like saying if I bought, let's say, anything, it's something as stupid as a bag of twisties 10 years ago. Now it would have gone up. Let's say it used to be like 2 ringgit. Today it's selling at 4 ringgit. So in 10 years it doubled up. Isn't that the same as if you bought a property and it doubles up in 10 years?
Yeah. It's the same thing.
Just that. So twisty has an expiry date. That's it.
It's a long game, like everything is a long game, but end of the day, right, when you're at the end of the finishing line, when you look back, of course you'll be glad that you actually did it.
Yes. So whatever it is, investment in the stock market, investment in your own knowledge, in yourself, in your health, play it for the long game. Don't play it for the short game. There are no shortcuts. There are no
shortcuts.
There are no let's follow the signal in investment, because one day when they give you the wrong signal, that's when you wipe out, and that's how they get you into debt, and you are in their palms and their control. There's no such thing as watching one YouTube and you can be a doctor. There's no.
That's correct. Yep. It's like getting abs, lah. It's like you go to the gym and get abs. You can't go to the gym today and hope the abs come out tonight. It's years and years of consistent going to the gym, to exercise, eating right, sleeping right, then the abs appear. Correct.
You can't be like big, round and put on one of those muscle stimulating machine and still continue eating and it will form that 6 packs for you in 4 weeks. It just doesn't work that way. You have to do lots of commitment.
Yes, you have to commit.
All right, guys. So we will be having. I'm trying to get hold of some
interesting guests.
Interesting guests for our next session. Hopefully, it'll be next week. If not, then it might be the week after. And we'll be talking a little bit on body shaming. So that'll be. This guest, if anyone knows him, so a little bit of a teaser. He took 4 months off social media. He was a big time social media influencer.
Okay.
And he took 4 months off because he was so stressed from people body shaming him to the point of depression. And he had so very low self-value of himself. Even though he was actually a very likable person, but he just, in his mind, it's just replaying that, he's useless. So body shaming. So that will be probably next week or the week after's topic. We'll see when is his free time and we'll coordinate.
All right. So until next time, this is Two Dogs. I'm Dr. Ingky.
And I'm Dr. Alice. We're signing off.
Yay, ciao.
All right.